Right now, two things happened in the last few hours that by every standard model of how this market is supposed to work should have pushed silver higher. Two separate developments, two different signals, both pointing in the same direction, both bullish. And silver, it didn't move up, it moved lower. As of this morning, silver is hovering around the $74-$75 range, already down for multiple sessions and extending a broader pullback from recent highs on a day when it had every reason to rise. Now, I want to be very clear before we go further. This is not financial advice, this is analysis. Because when a market behaves in a way that contradicts its own drivers, that's not random. That's not noise. That's information. And if you understand that information, you see what most people watching the same chart are missing. Stay with me, because the sequence matters. Let's walk through what just happened. First, the macro environment. Oil prices are still elevated. In fact, Brent crude has surged toward the $109 range in recent sessions, driven by disruptions in the Middle East and uncertainty around the Strait of Hormuz, which carries nearly 1/5 of global oil supply. Now, in normal conditions, this is a classic bullish setup for silver because higher oil, higher inflation, pressure on currencies, and historically, that pushes investors into hard assets. Gold rises, silver follows. That's the model. Second, central bank expectations. Right now, the Federal Reserve is preparing for one of the most critical meetings of the year. Markets are expecting rates to remain elevated, with policymakers still cautious due to inflation risks. And here's why that matters, because silver is a non-yielding asset. It doesn't generate income. So when interest rates are high, holding silver becomes less attractive. So again, we have two major forces. Inflation pressure from oil, bullish high interest rates, bearish. But here's where it gets unusual, because even with geopolitical tension, even with inflation risks rising, silver didn't rally. That's the signal. Now here's what most people don't see. Silver is not just reacting to headlines, it's reacting to priority. And right now, the market is prioritizing something else. Let me break it down. Force one, the US dollar has remained firm, supported by higher rates and global uncertainty. And when the dollar rises, silver usually falls because it becomes more expensive globally. Demand weakens. This is basic currency mechanics. And right now, that pressure is real. Force two, inflation expectations. Now this is important because rising oil prices don't just increase inflation, they increase inflation expectations. And institutions like the International Monetary Fund have already warned that rising energy prices could push inflation higher globally. And when inflation expectations rise, central banks don't cut rates. They stay restrictive, which reinforces higher real yields, and higher real yields pressure silver. So now we have a contradiction. The same oil shock that should push silver up is also keeping rates high, which pushes silver down. And right now, the market is choosing which side matters more. Force three, industrial demand risk. This is where things shift, because silver is not just a monetary metal. It's an industrial one, used in electronics, solar panels, manufacturing. And here's the problem. High energy prices don't just increase inflation, they increase costs. They slow production, they reduce industrial demand, and we are already seeing signs of that. Markets are starting to price in slower growth as energy disruptions ripple through the global economy. So now silver is caught between two identities, monetary asset, industrial commodity. And right now, the market is leaning toward the industrial side. Force four, positioning. This is the part nobody talks about. Markets don't just react to news, they react to expectations. And in recent weeks, silver already rallied toward the $80 level on optimism around diplomacy and easing inflation, which means some of that bullish narrative may already be priced in. So when new positive developments appear, the market doesn't chase, it reassesses, and sometimes it sells. Now put all four forces together. Strong dollar, elevated inflation expectations, industrial slowdown risk, pre-positioned market, and you get a market that falls even on bullish news. That's not irrational. That's precise. Now here's the part that matters, because something else happened today that most people completely missed. While silver was falling, gold also struggled, but not in the same way. And when that divergence appears, it usually signals a shift in how the market is classifying risk. Historically, When silver underperforms gold, it suggests one of two things. Industrial concerns are rising, or speculative positioning is being reduced. And right now, both may be happening because the global backdrop is unstable, energy markets are disrupted, supply chains are strained, central banks are cautious, growth expectations are uncertain, and institutions are adjusting accordingly. Now here's what that implies. The market is not rejecting silver, it's reweighting it. It's saying, we acknowledge the long-term case, but we are not paying for it yet. And that distinction is everything. Because markets don't move on possibility, they move on confirmation. And right now, confirmation has not arrived. Which brings us to the real question, what happens next? Not in 6 months, not in a year, in the next 72 hours. Because this weekend matters, before Monday matters, the next headlines matter, and silver is waiting, not reacting, waiting. And when that waiting ends, the move may not be gradual. It may be fast. If this breakdown is helping you see the market more clearly, subscribe to the channel and drop your view in the comments. Do you think silver breaks higher or lower from here? Because the market has already started making its decision. Most people just haven't seen it yet. Now let's go deeper, because what happened today is not just unusual, it's incomplete. And incomplete markets are the most dangerous ones because they don't give clear signals. They give mixed signals, conflicting signals, signals that look bullish, but behave bearish. And right now, silver is sitting right in the middle of that contradiction. Let me show you something most people are not tracking. Over the last 10 days, silver moved from around $82 down towards $75. Not collapsing, not crashing, but slowly, consistently weakening. And that kind of movement matters, because it tells you something important. This is not panic selling. This is controlled selling. And controlled selling comes from institutions, not retail. Pay attention, because institutions don't chase headlines. They price risk. And right now, they are pricing something that hasn't fully shown up yet. Let's break down what that could be. Scenario 1, the delayed explosion. This is the bullish case, and it's still very real. Here's what has to happen. First, the situation around the Strait of Hormuz stabilizes. Shipping resumes. Oil supply improves. Because right now, oil has surged above $100 per barrel due to disruptions in stalled talks. If that pressure eases, inflation expectations may start to fall. And when inflation expectations fall, central banks gain flexibility. This is where the Federal Reserve becomes critical, because the Fed is currently holding rates high, partly due to inflation risks driven by energy prices. But if oil drops and inflation expectations cool, the Fed may shift tone, not immediately cut rates, but signal flexibility. And historically, even a shift in tone can trigger a move in metals, because markets don't wait for action, they front-run expectations. So in this scenario, oil drops from 100 plus toward 85-90, inflation expectations soften. The Fed signals potential easing. The dollar weakens, and silver, it doesn't drift. It moves fast, because once the monetary side takes over again, the industrial concerns get pushed aside. And that's when silver can reclaim momentum. We've already seen a preview of this. Just days ago, when optimism around oil supply briefly improved, silver surged toward $82 per ounce in a matter of sessions. That's how quickly this market can move. Now imagine that, but with confirmation. That's scenario 1. Scenario 2, the pressure build. This is the bearish continuation. And this one is being quietly priced right now. Here's what triggers it. The oil situation doesn't improve. Negotiations stall again. Shipping remains restricted. Energy prices stay elevated. Because right now, the reality is still this. Oil supply is constrained. Tankers are limited. Diplomatic progress is uncertain. And that matters. Because persistent high oil feeds persistent inflation. And persistent inflation forces central banks to stay restrictive. Again, the Federal Reserve is at the center of this. If inflation remains elevated, the Fed may maintain high rates longer than expected, and that keeps real yields high. And when real yields are high, silver struggles because it has no yield. Now add one more layer. The International Monetary Fund has already warned about slowing global growth tied to energy disruptions. And that's critical, because if growth slows, industrial demand weakens. And silver, as both a monetary and industrial metal, gets hit from both sides. So in this scenario, oil stays above $100, inflation remains elevated. The Fed stays restrictive, growth expectations weaken, and silver, it drifts lower, not collapsing, but grinding, testing lower levels, possibly revisiting the low $70 range, not because the long-term story is broken, but because timing shifts. This is important because markets don't just price direction, they price timing. And if the timing moves out, price adjusts. Scenario 3, the compression zone, most likely short term. This is the one most people underestimate because it's not dramatic. It's frustrating and it looks like nothing is happening. But something is. In this scenario, nothing fully resolves. Not oil, not inflation, not central bank direction. Everything stays uncertain. And when everything stays uncertain, markets don't trend, they compress. Silver trades between roughly $72 on the downside, $78, $80 on the upside. Every rally gets sold. Every dip gets bought. No conviction, no direction, just positioning. And this is where it becomes dangerous because compression builds energy, and energy eventually releases violently. Now, here's the key insight. Markets that fail to move on good news are not weak. They are waiting, and waiting markets are unpredictable. Because when confirmation finally arrives, they don't ease into it. They react instantly. And right now, we are sitting right before that moment. This weekend matters because negotiations, headlines, unexpected developments, all have the potential to shift expectations before Monday matters, because markets will react instantly to anything confirmed. And this week matters because the Federal Reserve meeting and commentary from policymakers will shape expectations going forward. This is not a normal week. This is a convergence week. Multiple forces, multiple timelines, all colliding. And silver is sitting right in the middle of it. If this is making sense, subscribe to the channel, because most people are only watching price, not understanding the structure behind it. And comment below. Which scenario do you think plays out? Bullish breakout, continued pressure, or sideways compression? Because your answer to that question determines how you interpret what happens next. Now, here's what I want you to focus on, not the price. The reaction, because the next move in silver won't be about what happens. It will be about how the market responds to it. And that response is coming soon. Now, let me bring this all together. Because what happened today was not random. It was not noise. It was not weakness. It was a signal. Silver did something unusual. It failed to respond to conditions that historically push it higher. And when that happens, the market is telling you something very specific. It's saying, I see the potential, but I'm not pricing it yet. And that distinction is everything, because markets don't move based on what could happen. They move based on what is confirmed. Right now, we have potential everywhere. Oil is elevated. Energy supply is uncertain. The Strait of Hormuz remains disrupted, keeping inflation pressure alive. Central banks are under pressure. The Federal Reserve is expected to hold rates because inflation risks remain high. And institutions like the International Monetary Fund have already warned that global growth may slow under these conditions. So the macro setup, it's intense. But the outcome, still unclear, and that's why silver didn't move. Because right now, the market is not reacting to the story. It's waiting for the result. Let me show you the deeper signal. When silver doesn't rally on bullish conditions, there are only two possible interpretations. Either the market doesn't believe the catalysts will play out, or something stronger is overriding them temporarily. And based on current data, it may be the second. Because right now, Three forces are dominating everything. 1. Real yields remain elevated. As long as central banks keep rates high, non-yielding assets like silver remain under pressure. 2. The dollar remains firm, and a stronger dollar historically reduces demand for silver globally. 3. Industrial demand uncertainty. Because rising energy costs may slow manufacturing activity, and silver is heavily tied to industrial demand. This is not speculation. Data already shows that industrial silver demand is under pressure in 2026. Even as the market remains in a structural supply deficit. So now you have a paradox. Long term, silver may have supply constraints. Demand may remain strong. Short term, growth risks, rate pressure, and liquidity constraints are dominating. And the market is choosing the short term for now. So now here's the part most people completely miss. This kind of behavior doesn't happen at random points in the market cycle. It happens near turning points. Because historically, when markets stop reacting to good news, they are either about to move lower or about to explode higher. But they don't stay neutral for long. And right now, we are very close to that decision point. Let's be extremely clear about what matters next. Next 72 hours, this is critical. First, the weekend, watch geopolitical developments because the situation around Iran, energy supply, and shipping routes is still unresolved, and even small updates can shift expectations quickly. Markets may open Monday, already pricing new information. This is not theoretical. This has already happened multiple times this year. Second, the Federal Reserve. This is one of the most important events because the Fed is balancing inflation driven by oil, growth at risk globally, financial conditions still tight, and even subtle changes in language can shift expectations. Words like inflation expectations, global growth concerns, data-dependent policy, these are not just words. They are signals, and markets react instantly. Third, the dollar and yields. This is the hidden driver because if the dollar weakens, silver may rebound quickly. If yields drop, silver may gain momentum. But if both stay elevated, pressure continues. Now here's the final insight, because this is what separates casual viewers from serious observers. The market today was not confused. It was precise. It saw inflation risk, geopolitical tension, central bank uncertainty. And instead of reacting, it paused. That pause is not indecision. It's calculation. And calculation always leads to action. So the real question is not, why did silver fall today? The real question is, what happens when the market stops waiting? Because when that moment comes, it won't be slow. It may be sharp. It may be sudden. And it may catch most people off guard. Right now, silver is trading near $75 per ounce after pulling back significantly from earlier highs. But the structure behind it, still unresolved. The supply deficit remains. The macro pressure remains. The geopolitical tension remains. Nothing has disappeared. Only the reaction has changed. And that is the signal. So watch carefully. Watch this weekend. Watch Monday. Watch the Fed. Because silver just did something unusual today. And what it's telling us is not about today. It's about what comes next. If this gave you a clearer read on what's actually happening, subscribe to the channel. Because most people are reacting to headlines, not understanding the structure behind them. And drop your view in the comments. Do you think silver breaks above $80 again? Or drops toward the low 70s first? Because the market has already started choosing. Most people just haven't realized it yet. I'll see you in the next video.